Good afternoon, and welcome to Innovation in Action, digital strategies to drive small business prosperity. Discover leading-edge digital strategies that empower small businesses to thrive in today's competitive landscape and how their financial institution can serve as a trusted business partner. This webinar explores how innovation in banking and payment solutions can drive efficiency, enhance financial management, and accelerate business growth, all while creating loyalty and driving revenue for the financial institution. We thank you for joining us. I'm Catherine Tracy, a Director of Business Development here at Bank Director. This webinar is brought to you by both Finex Tech and ebankIT. Launched in 2014, Finex Tech is a specialized resource connecting a highly influential audience of U.S. financial institution leaders with technology partners at the forefront of innovation. Finex Tech makes it easier for financial institutions and technology companies to work together through its exclusive in-person events, editorial content, and online Finex Tech Connect platform. ebankIT is a digital banking platform provider to community financial institutions, offering customizable, highly personalized, omni-channel solutions to retail, SMB, and large-scale commercial accounts. A strength lies in their ability to support business accounts with advanced, self-service digital banking tools ranging from new account self-service onboarding, managing payments, establishing multi-layer controls, financial insights, and multi-entity banking. Before we begin, there are a few things to keep in mind. We encourage you to stay engaged throughout the webinar. If you have any questions for the speakers, click the Q&A button on the right-hand side of your screen anytime during the presentation. Our speakers will address your questions. The presentation will be shared with all attendees within 24 hours via email. It will also be available on finextech.com. If you experience any technical difficulties, please use the Q&A button to let our team know, and someone will assist you promptly. Finally, the opinions expressed in this webinar are those of the individual speaker only and do not necessarily reflect the opinions of the other speakers or of the entities with which the speakers are associated. On that note, let me introduce our speakers today. Dixie Barrios is the Executive Vice President and Chief Operating Officer of Metropolitan Commercial Bank. Provenzano is Vice President of Market Development at ebankIT. And our final speaker today is Vidya Vishal, who is a financial services executive and currently serves as the Director of Digital Banking at Barlow Research. So with that, Paul, Dixie, and Vidya, please take it away.
Excellent. Thank you, Catherine. And it's great to be with everybody today. Really excited about the topic we have around digitizing the SMB market in financial institutions, and really glad to have Dixie and Vidya really join the conversation today. Before we jump in, I thought it would be worthwhile just to ask both Dixie and Vidya just to elaborate a little bit on each of their organizations, and then we can dive into the discussion. So Dixie, if you don't mind, I'll start with you, and please tell everybody just about Metropolitan Commercial Bank.
Sure. Metropolitan Commercial Bank was founded in 1999 and is headquartered in New York City. We have a small network of full-service banking centers, primarily in Manhattan, Brooklyn, and Long Island. We're a community-focused bank, providing a full range of business, commercial, and personal banking products, primarily to small and middle market businesses, as well as affluent individuals. We pride ourselves on being a relationship-driven bank, offering one-on-one personalized service and helping to build generational wealth.
Awesome. Thank you, Dixie. And Vidya, tell us a little bit about Barlow before we jump in.
Hello, everyone. My name is Vidya Vishal. I'm the client executive and the director of digital business banking at Barlow Research Associates. Barlow is a research firm that's been around since 1980 with deep expertise in helping financial institutions understand their business banking customers, small and middle market businesses, just like Dixie said earlier. And our solutions combine market trends, customer insights, and competitive intelligence to deliver actionable strategies.
Awesome. Thank you, Vidya. One of the things I'm really excited about today, and why I'm really glad to have both Dixie and Vidya join the conversation, is we have it from both. We've got insights from both the research side and we have some insights from the application and the customer, the small business side, the banking side. So I think we'll have a nice balanced conversation today as we talk through strategies and innovations to really propel the small business community and community banks. Really what kind of spearheaded or really gets this conversation going is a lot of market research is being done, a lot of insights. Vidya is going to certainly share some from Barlow, but there's this a consistent theme or a consistent trend with a focus on the small business community and how this customer base can be more effectively and more efficiently served. Just to cite a couple of examples, a few studies that have been done just within the last 6 to 9 months. For instance, Forbes recently conducted a study that highlighted the importance for community financial institutions to really court small businesses, citing that about 45% of small business owners didn't really even know what services their financial institution offered. Another study by an organization called the Frontiers Systematic Review in May of this year identified that digital banking capabilities, service quality, and pricing competitiveness are top priorities or drivers for why as small business owners may consider making a change to another financial institution. And there's been countless other studies over the last 12 to 18 months. And so it really sets the foundation and establishes, really the first question for our conversation today. And Vidya, I'm going to start with you from the research standpoint. What is Barlow seeing are some of the key things that are happening in the small business, mid-sized space today? And, what does it mean just in general for community banks, community financial institutions, the way they serve them?
Thank you, Paul. So, as you mentioned, small business financial conditions are seeing a lot of uncertainty. They remain strained, but the good part is they're showing signs of improvement. According to our most recent economic pulse report that we released, we're getting ready to release the third quarter report in just a couple of weeks. But what we've seen recently is that gains in sales, profits, and cash reserves have sparked renewed optimism. Small businesses in general are a very optimistic bunch. So they're always looking forward, looking ahead, and looking at ways to stay resilient. And notably, concerns about tariffs have eased in the third quarter, although we all know this is still a developing story, so we'll keep an eye on that. But worries about rising costs and potential policy changes continue to weigh on business sentiment. So lots going on that's affecting small and medium businesses. But coming to banking relationships, 54% are small businesses. And here's where I start quoting some stats from our research. Here we define small businesses as those in revenue of 100,000 to 2.5 million in annual revenue. So 54% are small businesses and 69% are business banking customers, which again we define as 2.5 million to 25 million in annual revenue. So more than a half, approaching three-fourths, anticipate that their business banking needs will change in the next 5 years. And these changing needs bring an opportunity for the banks that are serving them to expand those relationships. And business clients' trust in banking relationships continues to be high, especially when it comes to mid-sized bank customers with that strong relationship base. 9 out of 10 businesses that we surveyed are confident that their bank will effectively address their future needs. And it's great that business owners have such a high level of confidence. So banks need to carefully evaluate evolving market trends and stay on top of customer banking needs to maintain and expand those relationships in the coming months and years.
Awesome. Thank you, Vidya, for that perspective on how the market and how the small business community, the needs that they're facing. So, Dixie, let's transition a little bit to Metropolitan Commercial. And I know that Metropolitan Commercial has been going through a bit of a digital transformation. You're in the midst of it. And so, when you think about, some of the key points that Vidya mentioned, how are you prioritizing within the digital transformation initiative, innovation and different products and services to prioritize and serve your small business community?
Yes, so we went into our digital transformation project really focused on the customer journey. We're highly focused at the moment on understanding the different segments of our customer base and then personalizing that journey for them. So part of the digital transformation was trying to develop a customer journey that made sense for our customer base. We're really focused on relationship banking. So we wanted that interaction with the digital channel to be as seamless for that customer base as possible. And that meant making that journey the right one to fit that customer base. So for a small business, their banking needs are quite different from a midsize or a commercial size business. So those customer journeys have to reflect those customer bases. So that's been a big focus for us, making sure that we have the technology stack that could support those different customer journeys and provide the products and services that they need.
Awesome. That's great. And so, Vidya, kind of building off of what Dixie just alluded to with um, customer journeys and kind of getting more detailed around some of the digital trends. What or how are you seeing that reshaping small business and how small businesses interact with their financial institutions from a research standpoint?
Paul, we dive quite deep into that topic. So I have lots of information to share here, but I'll keep it concise. Small and medium sized businesses are increasingly relying on digital tools for banking. Nearly 80% use online banking, and over half now use mobile banking. So, Dixie, you're right and smart in investing in that digital channel because that's where there's a lot of demand from customers. And our data shows that younger business owners prefer digital channels. And as more digital natives become business owners, this trend is expected to accelerate. So, this is definitely something to pay attention to. And notably, mid-sized bank customers are just as eager to adopt online and mobile banking as those at larger banks, even with the relationship component. So, this is not an add on, this is a critical step. And taking that a step further, digital capabilities are now central to banking relationships and are now influencing primary banking relationship. Paul, as you mentioned earlier, 33% of small business customers would consider switching banks for a better online experience. However, a broad barrier is cybersecurity and fraud. These concerns remain a major barrier to full digital adoption. And while digital payments are on the rise, lingering fears, especially around mobile security, are slowing the pace of adoption and engagement by users.
Awesome. Awesome. Thank you, Vidya. And so, Dixie, you had mentioned, we're going to just keep kind of going down this trail of the customer journey and ensuring that you're supporting the customer journey in a way that meets the small business needs. And so, is there a couple of examples of how Metropolitan has prioritized anything particular that you feel your customers have been asking for or are important as part of that transformation journey?
Sure. I think one of the biggest things, and Vidya talked to it a moment ago, there are actually a couple of points that she brought up that were important, not only to our customers, but ourselves as we looked at the overall journey. One was the overall experience, right? So we, as a commercial bank, our clients tend to have commercial commercial products with us first before consumer products, but we want, as an institution, to have that full relationship with the customer. So one of the things that was a priority for us is making sure that online banking experience was one that was as seamless and easy for them to use as possible, meaning that they go to one platform, they have all of their digital banking needs served on that one platform through one login, through one set of credentials, not having to go to 2 or 3 different platforms to conduct their different types of banking needs with the institution. So that was a big priority for us when looking to expand our digital banking offerings. the mobile first idea that Vidya brought up for the younger generation, as we set out to future proof our technology stack, mobile first was a big priority for us as well. Traditional commercial banking platforms tend to be PC first or laptop first, but they're not mobile first. So we knew that those trends, particularly in our market, were changing, and we wanted to be able to service the needs of that younger generation that has that smartphone at hand all the time and does all of their banking and other services on that one particular platform. So that was a big focus for us as well. Payments were a huge focus for us. The ability for the small businesses and the mid-sized businesses to transact through various different channels, from the traditional bill pays through to the FedNow and any other RTP. That was a big driver for how we developed our customer journeys, making that accessible for the consumers as well as the commercial clients was very important to us. And then finally, I think the biggest component that Vidya brought up was around cyber and fraud concerns. Risk management was top of mind in prioritizing our customer journey and our customer experience. Obviously, with the evolution of AI as it continues to evolve, the ease at which fraud can take place is also evolving rapidly, and we wanted to be able to address those needs. So we went in thinking about what are the best risk management tools that we can put into our technology stack to make the experience for the customer as frictionless as possible while still protecting them from a transactional perspective.
Those are some really good examples, Dixie. I appreciate that. And a question has just come in that actually aligns quite nicely from a timing perspective relative to how technology may shape or influence product positioning. So an audience question that just came in is, what non-traditional banking services would small business want from their financial institution, especially in a digital experience? So when you think about, a lot of focus is often put on innovation from a technology and infrastructure perspective, but how have you seen technology, either from the research side, Vidya, or Dixie from an implementation side? How is technology enabling you to expand or bring additional services beyond just checking, savings, bill pay, expanding the breadth of services that you provide? So question really for both of you. Dixie, if you don't mind, we'll start with you and get your perspective on that.
I think one of the things we see our customers asking for more and more is accessibility, right? Accessibility to the data, accessibility to conduct transactions directly without having to necessarily do the traditional types of logins that you would see from a digital banking platform. So what is important to us, and what was important to us as we built out our technology stack, was making sure that accessibility was there through API connections, through webhooks, trying to think through, based on the verticals that we serve, how can we almost embed our solution into theirs to make their experience with us as seamless and easy and still safe as possible. So from a non-traditional perspective, you're still offering a lot of the same transactional capabilities, but because you're embedding your services within theirs, it just makes the interaction with the bank a lot more easier. They can, download all their accounting needs into their solutions without having to go to us for reconciliation necessarily. So there are a couple of different things that can be done by going that route.
Awesome. Vidya, what about your perspective on that? Have you seen examples in the market of any non-traditional banking services that SMBs are asking financial institutions for, or in the spirit of innovation, the way that a financial institution may package or position their product or service? Any insight on that?
Absolutely, Paul. I'll mention a few. One is lending. And I know it's a traditional banking product, but here's why I bring that example. With new data sources, alternative data, better AI, ML models, artificial intelligence, and machine learning, better modeling and better predictive features mean banks and financial institutions can say yes more, where before the risk standards were so high that small businesses, especially if they were starting out and they didn't have 3 years of credit history, for example, would have to go to alt lenders. So there's an opportunity now to use technology and data and analytics to bring more of more of that lending activity into core financial institutions. The second theme I'll call out is Dixie talked about payments earlier and how that's so critical, especially as businesses grow larger, both for sending payments and receiving payments. There's a lot of digital integrations and partnerships with third party vendors that can help facilitate a more seamless interaction and a payment experience. So we're seeing partnerships like Melio with Capital One or in some of the larger banks, or partnerships with payroll providers like Gusto that banks are providing to bring some of those non-core services to their customers in a more seamless, integrated fashion. And of course, the last one I'll mention is the ability to use data to get a more complete view of the customer so that the bank can provide more advice and consultative guidance to the small business or small and medium business by being able to see the full picture of the business operations versus just the on bank relationship. So, just a few themes that I think are definitely growing stronger each day.
Yeah, I mean, those are some really good themes. We talked about, when we talk about non-traditional banking services, bringing value, that really becomes important because that becomes market differentiators for a community financial institution, with their customers in the way that they can market and position the product and service. So appreciate those examples. If we were to, let's just shift a little bit to some of the operational efficiency. So there's often a lot of focus, and we've talked about customer experience, more seamless experience, going to bring you more capabilities through that customer experience. But there's also opportunities when we talk about driving digital strategies for small business prosperity. There's opportunities to create operational efficiencies and to create an opportunity to make lives more efficient for small business owners. And so, Vidya, I'll start with you from a Barlow research standpoint, and you started to allude to it, but relative to operational efficiencies or financial health, what are some examples that you're seeing in the market where there's some financial institutions are really delivering strong capabilities that help drive efficiency, or through the survey of small business customers, what they're asking for, what they'd like to see their financial institution offer?
Sure, Paul. So, as digital banking adoption grows, and we talked about how it's growing every day, customers are demanding more sophisticated capabilities that help them complete those routine banking tasks quickly, efficiently, and securely. In response, banks have introduced features such as the ability to assign authorized users, so additional users that can use the account and conduct transactions, but also to set customized controls, such as limiting which accounts the sub users can access or requiring owner approval for transactions that are above a certain amount. So that's one area. The second, and digital payments will come up a lot today. This is another huge area of innovation. For outgoing payments, banks are enhancing customer experience based on customer demand with features like recurring payment scheduling. There's automated reminders and payment notifications. And on the acceptance side, there are solutions such as tap to pay and embeddable payment links that are helping small businesses modernize how they get paid. And this reduces friction both for the businesses themselves and their end customers. And last but not least, we're seeing that banks are also investing in tools that go beyond the transactional interfaces by supporting better financial decision making. I talked earlier about getting a fuller picture of the business to provide that advice. New cash flow forecasting and budgeting capabilities are also helping business owners gain more visibility into their financial future and manage it more actively. And some of these tools allow their customers to track expected inflows and outflows, model different financial scenarios, set spending limits, or establish a savings goal, for example. All of this is what's turning a bank into a more active partner in financial planning, not just a place to
Yeah.
hold funds and transact.
Yeah, no, I love that, and I think that's a really good example for small business owners. Probably one of the last things they want to do is really worry about banking and focus on their business. So yeah, the more efficiency and the more automation is, and the more control that they can extend to others. Certainly, there's some good examples. So Dixie, we've talked a lot about on the digital innovation front and how a small business owner can become more self-sufficient, a lot of self-service capabilities. But I imagine, as a community bank, relationship is still very important for you and for your bankers. And so, how are you approaching that balance between ensuring the technology is there, the tools are there, but also maintaining the relationship, either from a physical standpoint, or is there examples of how technology is helping you further establish that relationship? So, kind of the human versus digital balance. What does that look like at Metropolitan?
Yeah, relationship building is of utmost importance to us at MCB. Um, we look at the digital channel as just enhancing the customer experience, not replacing the banker here at MCB. So data is very critical to us. Data helps us understand those customer needs, and it helps us to become that financial partner with the customer to help to address their needs. So by having the data about the customer's interactions with the bank, such as sending out large deposits, it helps. It gives us the ability to be a little bit more proactive in how we're dealing with the customer. We can make that outreach, that phone call, and say, "Listen, I noticed that you were sending, $1 million to another bank. Looks like you might be doing a mortgage. Let's talk about how we can help you in that respect, or how we can shape the future after you've purchased that home." So we can be a lot more proactive with that digital banking experience as well. We could also help direct them a bit more, rather than them going to another bank for certain services and needs. We can explain to them proactively what solution sets we offer. We can also listen to what their needs are, and look to build those own solutions within our current technology stack. So we want to keep that human touch. We want to make it interactive. We want to be their financial advisor. We want to help them to continue to build that generational wealth. Having a seamless digital platform that they can go to when they just want to interact quickly is obviously important, and it's a great tool for us. But it doesn't take away that one-on-one human touch and that relationship building that we strive to do each and every day.
Yeah, I mean that's a really good example where I think the perception is that the more technology you throw at something, the greater that distance becomes in the relationship. And I think that's a really good example of how you can actually use it to reinforce proactively a very personalized, because now that becomes a one-to-one personalized experience. And so, Vidya, from the research side of it, there's a lot of talk around personalization, driving personalization, both from a consumer standpoint, and I think the bigger gap is, how do you drive personalization on a small business corporate standpoint? Dixie gave a really nice example there of proactively reaching out. So, from Barlow's research, or from what you've seen, around personalization, driving loyalty, deeper engagement. What are just some of the key findings that the Barlow is finding relative to that?
Yes, as Dixie said, the human relationship is not getting any less important, even with all of the focus on digital. In fact, 54% of small business customers agree that their relationship with their banker is just as valuable as the products and services themselves. So again, they see that that relationship as having a pretty strong and meaningful human component. And we're seeing digital platforms help facilitate this connection to the human. Some talking examples like live chat or the ability to schedule calls with a banker or a customer support rep. So, digital tools can help provide self service options for those who want to use it. But if there is an issue, they can also help drive deeper and more meaningful engagement with the bankers by facilitating that connection to make an appointment, to see somebody in a branch, or sometimes having a video call. And additionally, Barlow data also indicates that, especially for medium banks, customers are twice as likely, we're talking 21% versus 11% with larger banks, to seek advice from their banker. So, we're talking about, again, relying on their banker for that guidance and advice. More than half of businesses look for guidance on reducing expenses. So that's a big concern still. And a third are looking for credit advice. And in particular, larger businesses established, especially the more established ones, tend to look for guidance on time saving solutions through automation. They're looking to be more efficient and get through their business tasks quickly. They're also looking for ways to make their payments more efficient. So, understanding these specific business cash flow needs, and again, that data that I mentioned earlier is very helpful in getting that fuller picture. And understanding their processes is crucial for developing and deepening that engagement with the customer and strengthening that relationship.
That's fantastic. So, when we talk about, we've been talking a lot about from a technology standpoint, innovation standpoint, user experience. We've talked about the importance of self-service. And the perception oftentimes is that these, are self-contained through, one central provider. But technology is continuing to evolve. I think I saw a stat recently that, at least in the US market, there's over 10,000 fintechs that provide anywhere from very broad technology services to, very niche, very specific technology capabilities. And so let's shift the conversation a little bit to technology ecosystem, kind of the fintech ecosystem. And so, Vidya, this question, I'll start with you, is, from Barlow's standpoint, how important are fintech partnerships for financial institutions to think about when they're establishing a digital roadmap? Is there some things that they should be specifically looking for? What is some of your market insights and the different interviews and conversations you've had with community banks? Where have they gone relative to the kind of the fintech ecosystem?
Always a current topic, Paul. So, fintechs, as we all know, are innovative, agile. They move faster than the traditional financial institutions, broadly speaking. Banks, however, have the advantage of deep, long standing, and trusted customer relationships. So, when combined through strategic partnerships, the combination of the two can deliver a powerful and differentiated experience for customers, providing them the best of both worlds. But before pursuing partnerships, financial institutions, I would say, should start with a strong listening program, as Dixie said, to better understand the unique needs of their customer base. We can talk about, broadly speaking, what small and mid-sized customers want, but each customer portfolio is different. There are geographic differences, industry specific differences. So it's important to pay attention to what's unique to a financial institution's customer base before making decisions. And having that client centric view can help shape strategic direction, customer segmentation, and service models, which lays the groundwork for more meaningful and better aligned external partnerships. And integrating with fintechs can accelerate digital transformation. These partnerships can enable faster innovation, unlock specialized capabilities. As you said, there are a lot of niche providers that do one thing really, really well, and
Yep.
overall a more seamless customer experience. So there's an ability to deliver more modern user experiences that are harder to replicate internally. So successful collaborations can help banks broaden their offerings, enhance their customer satisfaction, and stay competitive in this rapidly evolving digital landscape. But I'll add that the right partnership isn't just about technology, it's about shared vision and long term value and a good cultural fit.
Yeah. No, I think I mean, those are some really good points. And, so Dixie, for you, as COO of Metropolitan Commercial Bank, I'm sure that you're not short of emails and phone calls of fintech providers that have the latest and greatest shiny object that would be perfect for your bank. And so, how do you balance or how do you prioritize, evaluate, and find those third party or those technology solutions to bring in that, will bring value or enhance the level of service for your small business clients?
I think it goes back to strategically thinking about how you want to grow your customer segments, understanding what those customer segments are, and then back to the what Vidya pointed out, the listening game of really understanding what those segments needs are. Um, we all see bright, shiny objects that we think could be fantastic. And I'm sure there are solutions that do well in certain environments, but they might not be the right fit for you and your customer base. I think understanding that is key. You have to have a good customer success plan for each of your
Mhm.
verticals and build towards that. At the same time, I think you need to be a little bit proactive about how you approach that. You don't want to react because the bank down the street suddenly has this new great product. You want to be almost first to market with a lot of these
Yeah.
solutions. And again, that goes back to understanding what your customer needs are, and then trying to go out and solve for those needs. And if that means partnering with a fintech or some other third party platform to help develop a whole new solution set that's needed in your marketplace that just hasn't been thought through yet. That's what we're willing to do. We're willing to be that first to market solution because we want to solve those needs, the needs of our customers, and that only comes with listening to them and really understanding what segments you're trying to serve. It's very difficult for a community bank our size to be a be all institution for every small business or every middle market business, and we have to understand that there are some relationships that aren't right for us. They're not the right fit, and we have to partner with the right fintechs and the right third party platforms that really bring that profit positioning for our customer base.
Yeah, no, that's a really good point. I mean, you think across the entire small business landscape, the variety and the variability between, a restaurant versus a service business versus, a real estate organization versus agriculture, and the list goes on and on and on. That variability is significant. And so, by just trying to throw things at the wall that you think might work, can be both expensive and just not very fruitful. So, certainly knowing that small business community that you're going to be most effective in supporting is, foundational. Absolutely. Appreciate that. So as we kind of start to wrap up on just a couple of remaining questions, a conversational topic that often comes up relative to evaluating technology and driving digital strategies, because again, there's could be a lot of different methods or mechanisms to do that. But the conversation also most always comes back to either ROI or KPIs or measurement to success. And so, Vidya, I'll ask you first, from some of the research and just some of the conversations that you have within the industry, are there some common metrics to success or some things that community banks, community financial institutions should look towards as they think about how digital strategies could, if they're being successful or not? What would you point to?
Sure. I'd say medium banks market share, Paul. That's the biggest metric to take a look at. By our statistics, when we look at the and medium business market overall, medium banks hold about a quarter of that market share today, and their share is expected to rise, especially in the business banking segment, which is those larger, the 2.5 to 25 million segment, where they're more established, adding on more capabilities or signing up for more services, and in general increasing their scope of operations. That's where there's tremendous opportunity, and this segment has seen a 14-point share increase in the past decade. So there's definitely a lot of momentum there, but the rate of increase of the market share will be the ultimate testimony to the success of all bank initiatives, including the digital transformation. And with very loyal small business customers already rating their medium bank almost 3 times as high on their NPS scores versus their large bank counterparts, again, speaking to that strength of that relationship there, digital initiatives need to keep up with the changing needs of the business so that they can continue to retain and grow revenue. And beyond market share, of course, there are several internal metrics that are also key to measuring success for digital initiatives. The biggest one is engagement. In other words, how many customers are using the digital channel, and adoption. It is hard to achieve ROI metrics without actually having adequate usage volumes.
Right. Yeah, no, that's a really good point. I think, especially when you look at, how frequently a small business owner might be interacting, online digitally, which channel digitally, mobile versus online, and how are they navigating through that channel, are certainly some good KPIs. And then Dixie, for you and for Metropolitan, as you're continuing to work your way through your digital transformation and rolling out new capabilities, are there some things that are on your mind or areas that you feel you're planning to, or maybe you started to watch closely to gauge success, adoption, some form of measurable KPI?
Yeah, I mean, we look at a couple of different both financial and non-financial measurements. So obviously, digital channel adoption is a big one for us. Deposit growth, cost per transaction is something else we're measuring. Branch versus the digital channel and that cost per transaction. From a non-financial perspective, obviously things like net promoter score, customer engagement. How often are they logging in per day? What kind of features are they adopting? And then obviously operational efficiency. Is our call center volume going down for certain types of calls because that digital interaction is a lot more seamless? And then also transaction completion rates. Are they doing that in a timely fashion through the digital channel? Are we seeing the reduction in the time that it takes for them to execute on some of those transactions? And then a big one for us is fraud detection rates. Are we catching potential fraud events before they happen or as they're happening so that we can alert our customers and stop the intrusion immediately? That's a big one that we'll continue to measure, particularly as the world of AI continues to evolve.
Right. Yeah, absolutely. A question just came in, and it alludes back to or part of our conversation when we were talking about the relationship and how relationships are important. And so there's, probably a never-ending debate on the importance or the significance a physical branch plays in the customer relationship. And so the question, when it comes to non-transactional interactions, so consultative insights, business insights, is your feeling or is your observation that small businesses, SMBs, want to interact more in branch or through digital banking, or how are you seeing that balance between online and in person in the branch? Dixie, I'll start with you on that.
Yeah, if we're talking strictly non-transactional, we still see a little bit of foot traffic in the branch, but again, that's dependent on the small business customer segment. There are some that are a bit more in person than others, but we find a heavy commitment more towards telephone interactions for non-transactional conversations, that financial planning, that management, that product understanding. Most small businesses just don't have the time to take out an hour or two out of their day to find a branch, go to that branch, sit down and wait for a relationship manager to talk to them. So being able to interact with them on the phone, through chat, through co-browsing even, we have that available. Offering different options, I think, is key because most of those small businesses don't have the time to seek out that branch.
Right. Yep, that's a really good point. Vidya, any observations from your perspective on that? Any
I'll echo
comments?
the same thoughts. There's definitely a place for both channels. There is no, and you'll ultimately have to provide the both options to the customer. And there's definitely some self-selection, right? There's some business owners who've been going into the branch every Tuesday, they deposit checks, meet with the banker, grab their coffee, and they are fine with it. And you still need to provide that option, and they may rely more on that human connection, especially when they need to have a deeper discussion with the banker. They may schedule ahead of time and say, Tuesday, 10 o'clock, I'm going to be there. So they definitely want that. But as Dixie alluded, there's definitely a younger set of business owners who don't even want to look at a laptop. They want to do everything in their mobile banking, and they want to be able to look up even if it is options for lending, for example, or merchant services options or what have you. They want some of that selection process to happen on digital methods as well. But if it's true advice, consultation, taking a look at the business plan, helping them identify where they need to improve or benchmarks that they can share, or even make connections with other business owners in the area, that's where there's much more of that human component and that relationship component coming in. So there's a preference towards going into the branch for that. So I think it's broad brush strokes.
Yep.
We're still seeing a lot of reliance on branch, but there's definitely a skew towards who's coming there versus not. I'll
Right.
also add that in some cases it's about saying it's not a branch or the mobile or digital, even having a chatbot, for example, that provides more of that Q&A versus the ability to, there's one thing to provide menus and places where a user can go and click and find the information. I'd say there's more of that, the demand for that interactivity that's coming up now, and that's being
Mhm.
enabled by AI. But of course, when there is an issue, there's nothing that enrages a customer more than having to talk to a chatbot when really they have a big pressing problem and they need to find a human, and there's too many
Right.
obstacles along the way. So I think it's
Yeah.
it depends on the one, but both channels have their space.
Yep. No, completely agree. That's a really good response. So, last question, and this is the crystal ball question. So, looking out, the next, and historically it's been looking out 5 years, but now things change so fast. Let's kind of narrow that down or scale that back to the next 18 to 24 months. But what's the kind of the next big bold prediction that you have, or that you're really watching closely as it relates to driving small business prosperity through the digital channel? What's one or two things that you would say are top of mind for you? Dixie, we'll start with you.
That's driving. I would say probably still looking at that kind of embedded component into the small business banking users platforms, what other solutions that they might be doing, embedding the financial solution into that rather than them coming to the bank. We're kind of going to them.
Right.
I think that with open banking and embedded finance and even AI, it's going to make that a bit more seamless and a little bit more proactive in how we manage those relationships by being able to do that. So that would be my prediction for the next probably year and a half at the rate we're going.
Yeah, right. That's right. It happens fast. Vidya, how about for you? Any big bold predictions for the next 24 months that come top of mind?
I'd say again, I'll quote a statistic here. 47% of mid-sized banking customers strongly believe that their bank will stand by them when things get tough. So there's that confidence, and there's that relationship and reliability or reliance on the bank for that advice and consultation. So when a small business customer has this type of confidence, it's important for banks and financial institutions to remain proactive in providing those solutions and guidance. And we talked about the blend between digital and human, finding the right balance and the right journey, to use Dixie's term from earlier, providing the right journey and experience for the customer is going to make or break the difference for strengthening those relationships with the customer. I'll also add that recent data also shows an impending transition on the horizon. 43% of small businesses anticipate an ownership change. So the average age of a small business owner today is somewhere in the mid 50s. So there is going to be that transition to the next generation. And this is a great indicator of a perfect timing for banks to strategically build value, those relationships by discussing those transition planning, new owner banking needs, providing good onboarding opportunities, understanding their digital products and features to increase engagement from the get-go and reduce the risk of attrition when that changeover happens. So lots of opportunity there. In fact, we recently published an ebook on all of these topics. So for anyone in the audience, please reach out if you're interested. But there's a lot happening in the world of small business banking that I think mid-sized banks and community banking institutions are very well positioned for, because ultimately it comes down to that human relationship. You can have the best digital platform, but if you don't have that connection to the customer, you're going to see a lot of attrition there. So I think mid-sized banks, community banks, credit unions are very well positioned to win in this game in this day and age.
Yeah, no, I really appreciate that. And it sounds, I mean, if you look at, from both of your responses, there's a combination of incorporating technology that brings a lot more financial value, financial insights to the small business owner so that they can run, manage their business proactively as opposed to reactively, but never losing sight of the relational aspect of it, which is one of the greatest assets that community financial institutions have, is that personal relationship with the small business owner. So really a great balance on that. Really appreciate Dixie, Vidya, appreciate your insights from kind of both sides of the spectrum. Catherine, I'm not sure if there's any other questions that have come in, but happy to take those.
Thank you all for the conversation. That was great. We have had a couple questions come in, and it seems like they're directed to a few of you. So I'm going to try to direct this, but anyone's welcome to answer. For Dixie and Vidya, I think this will go to you. So what are the digital pain points that consistently come to the top with business account holders?
Vidya, do you want to go first?
Sure. I would say clunky interfaces that are hard to use. The need for better customer experience is one we hear multiple times across different products, different platforms. The second I'd say is lack of trust, especially in mobile. There's a lot of investment going on the mobile platform side by financial institutions, but customers are, we still look through verbatim comments from surveys where where small businesses will say, I'm never going to make a payment on a mobile phone. I just don't trust it enough. And so, there's that's a challenge. The third one is, I'd say, need for education on how to use digital tools safely and providing it as one option, not the only option. As I said earlier, it's that balance that is so critical. The ability to reach a human when needed is so important, regardless of the investments in the digital platform. But that's where, especially with we've all heard the stories of the dreaded chatbots, not just in banking, but even with other e-commerce sites, where there are some customers who love it. They love not having to talk to anybody. There are customers who absolutely detest it, and they want a human, and please connect me to a human. So striking the right balance is a big pain point as well.
Yeah, I would echo everything Vidya just said as pain points. Going back to that customer journey, you really thinking that through and making sure that that's as seamless as possible. Because if you lose that customer from account opening and they can't then seamlessly go into their digital banking immediately, you've already kind of set what the overall relationship is going to be from a digital perspective. So you need to make sure that that interaction is as seamless, as frictionless. And then back to kind of the cyber fraud component, you want to make sure that the customer understands that risk management is top of mind. And the reason that we might do things like step-up authentication um, and requesting, some other out-of-band qualifications when you go to do a payment transaction is because we want to protect your transactions without having to revert back to some old school method of having to call up the customer. So again, trying to make that transaction with the bank as seamless and easy as possible while still protecting it.
Yeah, very good. Thank you both for answering those. Next question, and I think we have time for just one more. Paul, this would definitely be directed towards you. Does ebankIT have experience or expertise in supporting business accounts in the digital solution?
Yeah, I appreciate that question, and certainly as Dixie alluded to at the beginning, been a great client partner. The eBanking platform supports multi levels of business type accounts, small business, mid business to enterprise, multinational organizations. So multi tier holding company with multi businesses underneath it, multiple levels, approvers. So there's a full entitlement capability embedded in it, along with multi-currency, multilingual, and then the ability through an open API platform to connect to any third parties or fintechs that extend or bring additional products or services. So one of the things that we're really excited and proud of is the business side of how our digital platform supports that.
Yeah, absolutely. And thank you for that. We do have just a couple more minutes. And we had another question from the audience come in. So I'm going to read this to you all if you want to take it, and then I will close this up from there. So because banks are trusted advisors, SMBs want more from their banks than just banking. How are banks expanding what they offer beyond banking and then turning those value-added services into banking opportunities?
I can go, Dixie. I'll be brief. It's any product or offering is an opportunity for the bank to expand the relationship with the customer and get a fuller picture of the business operations, their needs, and for example, merchant services is again not necessarily a banking product. There's a lot of fintech providers, Square and PayPal and others playing in the space. So by bringing that such a core component of the business operations, the getting paid side into the banking relationship can really provide a strong hold from which to expand into other banking services. So I think every opportunity is a great lever to expand the relationship. Dixie, what would you add?
I again echo the same sentiment. Again, from my perspective, it's about understanding the customer, and that means getting the data on the customer. And the more data you have, the more ability you're able to create products and services to meet their needs. You're able to understand their habits, both from a banking perspective as well as from a personal perspective. A lot of times, so it comes down to really understanding the data and letting the data drive your decision making for future product sets.
Yeah, and I would just, the last comment that I would add to that in 30 seconds is that I think data is key. And I think data is while it's an extension of banking information, it goes beyond what traditional banking might provide. And so you start to turn that data loose for small business owners on what, historical data looks like from a predictive or a future standpoint very easily and very quickly. You become, as a community bank, a trusted financial partner. And I think that, the conversations I've had with community banks, that's really a key objective, is to be a financial partner beyond just a bank.
And if I can take 30 more seconds, I just wanted to add on to that. I think the power of data is also the power of benchmarking, especially for first-time small business owners, for example, who are just getting started. They have no idea what's good versus bad. So I think your financial institutions can use data to provide benchmarks, and that's a huge value add for businesses looking to tweak their model and get better established. There,
Wonderful.
30 seconds.
That was less than 30 seconds, I think. Wonderful. Thank you all for your comments here in the discussion. So thanks so much to Paul, Dixie, Vidya, and the ebankIT for co-hosting today's webinar. As a reminder, you will receive the recorded version of this webinar within the next 24 hours. And we will also be posting this webinar to phoenixtech.com. And thank you for joining us today, and have a great rest of your day.